Hello everyone and welcome to the free UK stocks I'm buying November 2020 edition. This is where I talk about the free UK companies I'm looking to most likely buy in the month of November. These are a few other ones, but these are the three that I'm really focused on. And there's going to be two stocks on here that I have not talked for a while, and as well as that, one of my favourite companies, so I'll talk about them in a second. But this video series is very popular. It's probably the most popular video I do every month on my YouTube channel, so it brings a couple of new guys into the stock market channel. So if you are new, make sure you hit that subscribe button. You guys that are here all the time, you guys smash that like button. Let's give a challenge of, let's try to get to 300 likes, that'd be absolutely amazing. And we'll get stuck into the video. So just before I get stuck into the free UK stocks I'm buying, I've got to say, on Monday when the new lockdown came in, I was kind of expecting a bit of a red day in the stock market. I thought there might be a few bargains, and I thought the stock market might have been down, 3-4%, but actually it was a pretty good day. The FTSE 100 was actually positive. The FTSE 250 was a little bit negative, but that it has been the better performer really over kind of the last couple of months since the coronavirus. And I think, the UK stock markets in general, especially when you compare it to something like the US, I think there's just so much negativity priced in. And I think the stock market in general kind of had a bit of a sigh of relief that, a lockdown for a month, that's all right. That I think there's so much negativity of oh no, it's going to be another 3 months lockdown, 4 months lockdown, that I think there's just so much negativity priced into the stock market now, especially the UK. And when you look at how much it's still down, I think when the stock market and investors actually heard it's going to be a month's lockdown, will be all right. I think the stock market was kind of happy with that, which is crazy to think that that's how much negativity is priced into the stock market. But you can see it on the stock chart, which is still pretty low down compared to a lot of other indexes really. So I think that was one kind of key standout thing that happened in the UK stock market over the last few days. And I guess that's kind of a positive for us investors, or us UK investors, that, we look at the stock market and that much negativity priced into the stock market, there's only kind of one way that the UK stock market can still go, and that's upwards. So I think as an investor, it was a good thing to see that that's how negative that the current UK stock market is. So I think it gives us a lot of positives over the next coming 2 to 5 years as a stock market investor, where we're going to be going. So I thought that was kind of something funny that happened over the last few days. And I have to say, with the lockdown situation being a month, I do think there's a lot of potential for another lockdown, or maybe even an extension of the one that we currently do have. So I wouldn't take that as guaranteed. I think there could be potential for that to change, but I did think that was a really interesting point that happened in the last few days. But we'll take a look now at the free UK stocks I'm looking to buy November 2020 edition. If you do want to keep up to date with what I'm buying, what I'm selling, make sure you join the Patrons group, guys. There's 120 members on there right now. It's a really fantastic group if you want to take it to the next step as an investor. We currently have exclusive content on there. We're looking at people's portfolios. There's a Discord group as well. It's pretty fantastic for the price. So if you do want to keep up to date with what I'm buying, what I'm selling, and have a bit more content, that's your place to go. But we'll have a look at the free UK stocks I'm buying 2020 edition November. So number one is JD Sports. So this company actually did have a little bit of a dip, and I think it had a little bit of a dip because obviously it has a lot of retail outlets. It also has JD gyms as well. It's quite a diverse revenue. It also still has its online sales, so it's not totally knackered, if you know what I mean, because of this announcement. But still, it did take the announcement a little bit more negative than other companies. Now I'm currently up quite a bit on this company. I think I'm up about 30%, but I'm thinking that lockdown, retail being short, does it get extended? There could be a bit more of a dip really in this one. So I would like to see if I can get this to go below 600. If I could get it around about 600, it might be time that I add into my JD position. So I am hoping that it does dip a little bit more. So and like I say, it's a great brand, JD Sports, JD Gyms, also has other companies like Foots Asylum, Scott's. So there's a lot of brands that it does operate. And the thing with JD as well is that it's one of those companies that hasn't just, dominated the UK market and gone, right, that's it now. It's actually gone abroad, and it's starting to dominate abroad and aggressively grow abroad, which is what I want to see a lot of UK companies do. I don't want to just see them dominate the UK and go, right, that's it. I want to see them come, worldwide companies, and JD has that mindset of where it wants to go. So, I mean, it has had a decent run since the COVID lows, and it, like I say, it has taken a little dip because of that news, but we'll see how much lower it goes. It is one that I'd like to just get a little bit lower if possible. So like I say, the ticker symbol is JD. The company has always been a profitable company. The company has always been profitable over the last few years, and that profit has grown. well as having very aggressive expansion plans as well, how it's trying to expand across the world right now. So that's a really good thing. You can see that it's paying off for it, because when you look at the revenue growth is absolutely fantastic. It's pulling in about 20%, 10% revenue growth. So we don't really have too many like growth companies in the UK, especially like in this sort of area really. I mean, there's only really ASOS and Boohoo that pops into mind. And yeah, you see the revenue fantastic, growing at a really decent rate, profitable as well. So yeah, I think it's one of the standout UK companies, and definitely one that you should consider having in your portfolio. When we take a look at the balance sheet, very healthy balance sheet. There has been a little bit of debt that's come on here the last few years. We'll see if it increases a lot with the lockdown and everything like that, but still at this sort of rate, it has a 23% debt to equity ratio, which is still pretty good. The debt is 313 million, and it does have a lot of cash. It's got 1.1 billion in cash. So when you look at the debt to cash, the cash is nearly covering the debt 3 times, well over 3 times. So yeah, I mean, the cash to debt is fantastic. So it's very healthy, even though it does have some debt on there. Did used to pay a little bit of a dividend, not a crazy dividend, not your legal and general dividend, but still, it's about 0.4%, which is nice, I guess, as well as that share price gain. It has cut the dividend though at the moment, so I thought I'd just make that clear. But it was a very low payout rate of about 6%. And probably one of the only things that I'm a little bit negative on with the company, the only one thing that I could say could be better, is the amount of people that didn't buy in when the stock went down. I thought a lot of insiders might buy the shares, they didn't. There's only been the chairman recently that sold. They did sell a lot of shares, to be fair, at about 13 million shares. So that was the only negative. The chairman did sell them out at £6.72 in June time, which I'm guessing he's kind of looking at it now and going, I could have got a bit more for that. But yeah, I mean, that was the only little negative there. But overall, I'm still really bullish on this company. I do really like it. Next up is a kind of a technology company, but is involved in real estate, which is called Rightmove. So I'm a big fan of these guys as well, because there's not too many big UK tech growth companies in the UK, and Rightmove is one of them. I think that overall in general, this market is a lot stronger than what people think. Rightmove themselves have come out and say there's a lot of demand, and you think about it, people are at home, they've got nothing to do. What might they do? Probably browse online at houses, maybe look somewhere to move, and the house market still seems really strong right now. And to be fair, the company has had a bit of a recovery since its COVID lows, so like I say, I would like to get this one potentially a bit lower than what it is right now. I would say that probably somewhere around below the 550 range would be cool. So if it could go down about another 10%, that could be where I start buying this one again. But I would love to buy more of a position in this one. I'd probably when this was down, I probably didn't buy enough of what I should have done really. So yeah, but I'm still a massive fan of the company. The ticker symbol is RMV. Historically, the company has massive profit margins. It's absolutely insane, but obviously when you're just online, it's so easy to do that, which is really good. You'll see that revenue as well grows in a fantastic rate, profit grows in a massive rate. You're looking at profit and revenue growing in a high single digit range, which is absolutely massive. And as well as that, Rightmove do control a lot of the online market for house sales, which is really good. When you look at the balance sheet, fantastic balance sheet as well. No debt on that balance sheet, great equity. When you look at the cash as well, it's got 50 million cash, which is lovely to see. But I don't think it will really need to actually use a lot of that cash really. I think, it will still be pretty much be able to get through without raising any cash. Used to pay a bit of a dividend yield of 1.2%. It has cut it now, which I kind of thought maybe they could have carried on paying that dividend, or maybe, only half the dividend. And, the payout rate previously was on it really low as well. So maybe that's the only criticism I have. And once again, there were no insiders buying in this company when it was a COVID dip, which maybe they should have done. But hey, is still doing really well with the current situation. And my last one is a company that I've been talking about quite a bit on the channel recently. It's a company that is currently my third biggest position in my UK portfolio, but I would not mind this company actually going to my second biggest position in my portfolio right now. So that might happen over the next few weeks. And it did have a little bit of dip because it will be closing down now because of the new lockdown restrictions, which is a company called Hollywood Bowl. So the ticker symbol for this one is BOL. And yeah, it used to be about a £3 stock, now trading about £1.20. And I do believe in the next 2 to 5 years, we'll be talking about this company being a £3 stock again, especially when you look at the growth it does previously. Its earnings were fantastic, came out and said that we were pretty much profitable from opening, which is great. So it seems like, if Hollywood Bowl get the go ahead to go back open, they'll go straight back to being profit again, which is absolutely amazing. And I think when you look at how much the stock price is actually sold off, great bargain really, it seems like. So like I say, it's trading about the £1.20, 26 range really. Historically, the company's been a great company, profit has always grown in the right direction. Same with the revenue, it's always had decent revenue growth, high single digit revenue growth. So yeah, it's a company that always performed well going into COVID, which is something really key that you want to look into. And it seems like when COVID's over as well, it'll do really well to do outside of the COVID situation. It seems like it could get to profit very quickly. Debt to equity is still pretty healthy, 40% debt to equity, currently got 30 million on the debt. But when you look at the cash side of it, it has about 15 million in cash. So yeah, I think it's kind of 50-50 whether they just raise, maybe a little bit more money on the cash side, because obviously they'll start burning through the cash again now they're closed, where the last few months they've been back open making profit, so they've not had to raise cash. So I mean, it depends how quickly they burn through that sort of cash pile now. We'll see what happens. I think they might be all right. They might raise a little bit just to make sure. But yeah, still, I think they'll easily raise cash, because, if they go to lenders, be like, look, we're only struggling because of COVID. Previously we're profitable, we reopened, we're profitable. They'll easily be able to raise money however they want to do it. So yeah, still in the debt to equity rate, the cash, the debt, still very healthy really. Used to pay a decent dividend, used to pay about a dividend that was going all the way up to 4-5% before the COVID. Obviously they've cut that right now, but even back then the payout rate was pretty low. So I think it will come back to paying a dividend. Probably not obviously this year, probably not next year. I think early 2022 we'll get a decent 4% dividend, as well as the potential to make a good 100%, 200% return on this one. And one of the really big things that got me across the line on Hollywood Bowl is how good the management team was, and how well they did expanding previously to COVID, and then just have the confidence. And when you look at how many insiders bought shares on the COVID dip, was huge. Pretty much like every person on the inside bought some shares, which is, I think, great confidence sign. So yeah, pretty good. And when you look at when the insiders bought, they all bought around about £2, £1.45. And you look now, it's even lower than that. So yeah, Hollywood Bowl is definitely one of the stocks that I want to make. Probably my second largest position, even have the potential to make it my biggest position, to be honest with you. So overall guys, those are the 3 UK stocks to buy, November 2020 edition. I hope you enjoyed it. 2 stocks I haven't talked about for a while, and definitely one company that I've talked about a little bit that I do want to make a really big position. There's a couple of ones that I am looking into, a couple of UK growth companies, so I'll see if they go anywhere. I'll probably do a separate video on them at some point anyway. So I do hope you enjoyed it. Like I say, if you could smash the like button, it really helps the video get out there on the algorithm on YouTube. And if you are new and you made it all the way to the end, make sure you hit that subscribe button so you can see future videos. That'll be absolutely amazing, and I'll see you on the next video.